No, I tell everyone, you cannot be in any one asset, in my view. You got to be somewhat diversified. You must have hard assets. Okay. Silver's my favorite asset of all time. I have it all over my desk. I just like to look at it and touch it and play with it.
And I just wanted to recall that over the years that I've known you, which is many, you've always advocated, even though you say keep a foot in the capital markets to be able to make profits and pull those profits out, that you don't leave all your nest eggs in there. That's what you were just talking about, being diversified into real, tangible things.
You have to.
So that, because the questioner almost implied that situation of how do we get our cash out of the capital markets at a time if they all lock up, and it's like
you can't keep it all in. No, I tell everyone, you cannot be in any one asset, in my view. You got to be somewhat diversified. You must have hard assets. Okay. Silver's my favorite asset of all time. I have it all over my desk. I just like to look at it and touch it and play with it. You got to just look at everything. But like, again, in a worst case scenario, what's all this going to mean anyway? You can have piles of stuff laying around. If you don't, what we're talking about, like, you can't eat gold, you can't eat silver. I'd love to have it, but there's going to be a massive increase in that from understanding how this is going to play out as cash bleeds out of the debt market. When we get that implosion, rates will spike, a lot of pressure on the stock market, which is going to sell off in an epic way. I mean, there's no doubt that the biggest crash ever is coming in the stock market. Who knows? We can have an 80% sell-off with regard to the S&P 500. It's very, very possible. And all that cash is not going to grow little cash wings and fly away to money heaven. It's just going to move. It's going to move into commodities, into real things. That's how I see this playing out. I also believe the market cap of cryptos is going to balloon. You need exposure to lots of different things with regard to, understanding how this is going to play out from a financial standpoint, but it goes beyond financial. That's why I leave off every Friday with the same things. That's the most important thing. This is all lovely. To me, I love the game. I really do. I get up every morning and I say, okay, how is this playing out here? Looking at the stock market. It's almost like a video game, moving cash over here, taking it from over here. It's not even real. It doesn't exist. It's all digits anyway. It's literally like playing a video game. So that I love. I love that whole part of it. And at the same time, understanding that you must be betting against the debt, becoming your own central bank, getting prepared for the movement of cash. I do not care really about the day-to-day movement of the market. I don't even really think about it anymore. I used to be more of a day trader, swing trader. Totally don't do that anymore. I'm in the market here owning large cap dividend paying stocks. Some of them have done not so well. Some of them have done very well. But I trade around these positions now by becoming a net seller of options onto the market. Generally, I sell puts, 20% out of the market, expiring like in a month. So I'm pulling what's called premium. I get paid up front, pull premium out of the market. That's it. It's a lot less risky than what I was doing before for a very long time. And it's a young man's game, and I'm not that young anymore. I'm 56, so believe me, I feel it in my body and everything else. But we got to look at the bigger picture. We got to sit back here and say, what's really important? Is it really all this other nonsense, big houses and swimming pools and Ferraris and Maseratis and Porsches, and or is it bigger than that? In my view, it's way bigger than that.
Along the line of people who are at least trying to position themselves, besides being in some tangible assets, they're also trying to keep some powder dry, as Rick Rule has talked about, maintain liquidity. You've talked about having the high ground, etc. Mark Capelli asks, during a, quote, stock market crash, what usually recovers more quickly, gold or silver mining stocks? I have a watch list of mid and large cap stocks that I'll be buying at the market crash. I'm hoping to utilize profits from the mining stocks to purchase my watch list stocks and also holding cash. Thank you for all your outstanding videos. Thank you for keeping us informed.
Well, I generally don't talk about things that I don't own. I do not own miners. I just would rather hold these things. That's how I play that part of the market. I'm not saying that there's no value there. There is value. There's no doubt about it. I just don't own it. And I think at one point when we do get that market crash that everyone is believing, at least understands is going to happen, there's going to be a lot of opportunity for people to get in there. The market, in my view, is going to overcorrect. It always does. The one thing about the market you can always count on is an overreaction, either to the upside or to the downside. It always works that way. And being able to recognize those overreactions is what makes it interesting and what makes it, I wouldn't say easy, but easier maybe to capitalize on it, because the market just doesn't make these mechanical moves. The market is emotional, and the market is driven by people's emotions. So you always get these overcorrections. So I do believe we're going to get an absolute meltdown here in the stock market. It's going to be on a biblical scale. People aren't even going to believe how low the S&P 500, I always refer to the S&P because it's the broader market, is going to go. And then there's going to be a lot of opportunity down there, in my view, because these companies have value. All right. They have people working for them. These are real things. So, and I'm not talking about the derivatives here. I'm talking about owning actual stock in these companies, owning a piece of it, having voting rights if you own a common stock, or if you want to own preferred stock. There's all kinds of different things. You lose your voting right, but you get other benefits out of it. But look, my job, or what I do for people and myself, is try to look for where opportunity lies. This market today is in a technical correction. It's been that way for just about 4 months. The high in the S&P was, I think, early January. Since that time, the S&P 500 has lost 13%, just about off its high. And there are people out here freaking out that we're in some kind of a market crash, and we are not in a market crash whatsoever. Look up the definition of a technical correction. That's all this is. Yes, the NASDAQ is in a bear market, but again, we're looking at the S&P 500 here. The NASDAQ is under pressure because it's very interest rate sensitive. And once the market adjusts to that, I think it's going to turn around. I really, really do. The crash is going to occur in the debt market first. It's not the stock market where they're trying to get you to look and stay panicked about. It's not the stock market. It's the debt market. The debt market is the driver. So once you understand that, everything else should become clear to people. Watch the 10-year yield. You can look at the whole yield curve, absolutely, and worry about inversions and this, that, and the other thing. But for me, it's the 10-year yield. It's the benchmark, and that's where everyone should have their eyes focused. And they're going to know when the real problem starts, when we see bang, bang, 3%, 3.25%, 5%, 4%, but rapidly, not a smooth slope as the Fed is raising rates, but very rapid. I mean, probably within days, you would see going from a 3% to a 4% or higher. And who knows where it can go? Because look, trying to put a real value on debt, no one can do it. It's been artificially inflated and ballooned beyond anyone's wildest dreams, and it's not going to stop either. The Federal Reserve continues to hyper balloon the money supply. Meanwhile, they want to stop inflation, right? Their asset purchases have not stopped. They're continuing to buy assets, mortgage-backed securities, doing a lot of talk, doing nothing. Go to the Fed's own website. Look at the charts. It's hidden in plain sight. Anyway, but that's my take on everything. I'm not worried. I never worry. I never rattle. Once people get worried and rattle and get scared, they're going to make a bad decision. And that can't happen.